Welcome to A Coleman Conversation. My name is Bob Coleman. I'm pleased to have Carissa Sousa, AVP, Shoreham Bank out of Warwick, Rhode Island.
Yes, that's correct.
Welcome, Carissa. Carissa, you and I have crossed paths several times. The latest was in Vegas for Sean Murray's Debanked event, talking to loan brokers. And we did a nice panel on the advantages of brokers working with institutions. So I asked you to come on the conversation, and you agreed. So thank you very much.
Oh, thank you.
I just did the numbers. Let me pull them up. Shoreham Bank, 51st in the country, and an 8.6% increase of loan volume for $140 million. Average loan size, $921,000. Very impressive for a community bank. So let's talk about Shoreham. Community bank, what's your footprint? Tell us about the bank.
Yeah, so we're based in Rhode Island, but we do lend nationwide. I don't really think there's any states we won't lend in, but we haven't lent in Alaska and Hawaii yet, so maybe one day. But primarily do hospitality lending, hotels. We'll do refinance, purchase, PIP loans of that sort. But we've been doing more of the small loans recently, so that's been coming up. The 150 and below, we'll do them as working capital loans.
Let's talk about that. SBA changed their guidance back in April, March to lenders about their small loan program. One of the largest small loan lenders, Bayfirst Bank out of Florida, completely not only got out of the small loan program, they completely got out of SBA lending. They were number 20th in the country, 9th in terms of small loans. How has that change or that guidance by SOP telling the lenders, hey, we want a little bit more control, a little bit more scrutiny on these loans? How has that impacted on how you approach your small loan program?
Yeah, so I've seen less applications coming in. However, I'd say we've been seeing more stronger borrowers through that with the guideline changes. We've also adjusted slightly, increased our minimum FICO a little higher. We've increased the loan amount determinations, like we do it revenue based, so it's a multiplier. So we've increased that up, higher revenue to qualify now. So we've tightened the guidelines slightly. But with that being said, we have stronger borrowers now.
Well, you know me, I love statistics. When you say a percentage of revenue qualifier, tell us about that formula and what that is based upon.
Yeah, so the revenue is essentially 5 times the total loan amount, or 20% of total revenue, however you want to look at that. But so if they make $750 in annual revenue over the last fiscal year, they can qualify for $150,000 total loan amount.
Okay, very good. And FICO score, you said you increased it. What is your? I know it depends, so I'm going to take that answer off the board. On average, what do you want to see as a floor?
So for our small loans in particular, we have raised it up to a 700 minimum FICO.
Very good. Very good. But again, with your average loan size of 921, what percentage of the small loans is in your entire SBA portfolio?
I'd say out of our total loans, maybe $8 million of that is small loans.
Okay, so very, very small amount.
Yeah. Yes.
We were in Vegas, as we said, doing the panel, and you were one of the few banks there. My question is, what is your attraction or your marketing plan in terms of reaching out that particular group of loan brokers? Tell me a little bit more of inside baseball of why you chose to go there. And of course, I appreciate you being on the panel as well. That was awesome.
No, of course. Our first banked event was probably last year in New York. So starting with that. Yeah, we did see that they had mentioned SBA lenders attended, so we were trying to get into new conferences. So we attended there. Again, being one of the only SBA lenders, we kind of stood out, but we realized that there was, I guess, a niche for us there because no others, and there were MCA brokers looking to get into the SBA space. So we found it to be a good fit to help those brokers and build them up to learn SBA.
Well, great. Well, let's talk about Carissa. And I love this. It says, you've been here in government guaranteed lending for 6 years. Well, on one hand, that's a short amount of time. On the other hand, look at what it encompassed. You started right when we were at the peak of economic growth. That was a great time to be in lending. Prime was very low. Correct me. I'm going to say 3.5.
3.25.
3.25. I stand corrected. And then bam, all of a sudden, the world changes with COVID, PPP. So even though 6 years, I mean, it's been a memorable 6 years. Tell me about your journey and walk me through your introduction to the business and how that's impacted you.
Yes, so I started interning actually at the bank during college. So that was kind of my lead-in. Didn't really know what I was getting into, to be frank, but I very quickly fell in love with it. I loved working with the small businesses, and I liked the loan side of it. I started doing loan reviews for existing loans on our portfolio. I wasn't originating yet. That switched into underwriting, and I really loved underwriting. I loved digging into the numbers, spreading financials, asking a bunch of questions. It was like uncovering different things you wouldn't think you'd find. And I liked working with the different industries, and that flowed into starting to go to events and originate. And I ended up loving that too.
Well, I hear your passion. Tell me a little bit more about the self-fulfillment you get from working with a small business owner.
I like seeing the small businesses succeed and getting the funds they need in order to do so. I like, even when they pay off, I'm happy because I know they're doing great. And that's the ultimate goal, is for them to be successful.
Well, very good. So you started as an intern. Now, so what year did you start as an intern?
2019.
Okay. So, wow. So you've moved up the ranks very quickly. Well, good for you. And I have to confess, you got a MBA. Congratulations, from Questrom School of Business at Boston University. I'm not familiar with that. Tell us about that educational process.
Yeah, I really enjoyed it. When I was looking through schools, I liked that how they had a module program. So instead of your standard classes or subjects like economics or accounting, they have a different take on it. You would take one class a semester, but they would encompass many different subjects into one. So you weren't just studying out of a book. You were mostly studying real life case scenarios with different professors in those industries and collaborating with people across the world. So I really enjoyed it.
And what was your focus in your MBA program?
It was just general management.
General management. And you started the interning with the bank. Tell us why you gravitated toward banking, because I know where you ended up, but start at the beginning in terms of, hey, I think I may want to do this as a career.
I was dancing at the time.
Oh, tell me more about that.
I was a student and I would do my dance classes, but one of my instructors was in accounting. And so I had loved accounting all through school. So I initially had interned at an accounting firm nearby. I enjoyed it, but I wasn't as interesting as I would have liked it to be. But I loved working on the business tax returns. I would prepare those more than I would the personals. So I was very intrigued on that. So when I was researching other internships at the time and found this and saw that you still worked with business tax returns, I figured it could be a different layer that may interest me more than actually preparing them.
I'm always fascinated on people's journeys and where they end up, and that I particularly enjoy what you're saying. Yeah, the accounting firm, and I wasn't interested in that, but you gravitated to something that you had an interest in, and look where it's grown. Now, I have a little bit of dance knowledge, having 3 granddaughters, so I'm going to pin you down. What type of dance?
My favorite was tap dance. However,
really? I would not have guessed that. Good for you.
I would do everything but ballet. I was not into ballet.
Do you still dance?
I do not.
All right, that's okay. That's okay. Very good. Well, I love that. You also are involved with the USDA program, Are you active in that? And last time I was in Rhode Island, I didn't see a lot of rural America in Rhode Island. So tell me about that.
No, I don't think we've done any of that in Rhode Island, most of it probably being Midwest or West Coast. But we've done a few of those. I think it's picked up more year over year. We may have done maybe 5 between this year, last year.
Okay.
It's slower. We primarily do the SBA, but if they don't qualify for SBA or they've maxed out their guarantee, we'll try and loop them into the USDA program.
Well, in the USDA world, 5 is a lot of loans. And I do remember Rhode Island, now my knowledge is going back several years, it may have changed, but there was criticism by the lenders in Rhode Island to USDA because there are 5 counties in Rhode Island, if I'm correct, and none of them have a rural designation, which means none of them are eligible for SBA loans, which is the only state in the country that cannot get a USDA loan. Has that changed, or are we still under those guidelines?
I believe we're still under those guidelines. Yeah. However, I'm not 100% certain.
Yeah. That's a really in the weeds question, but that's my knowledge of Rhode Island. Give me one deal that you're proud of over your career. I'll give you a couple seconds to think about that. But I'm looking about where the bank was able to offer a solution to a small business, and it exceeded expectations for the small business and on the banking side. Obviously, I don't want the name, you give the industry, but more importantly, I want to know your mindset and how you identify that and say, hey, I think if we do this, it's going to solve a lot of problems and create a great outcome. Go ahead.
Okay. I guess there's a few I could think of, but maybe
you're more than willing to share more than one. But let's start with one.
Most memorable is probably for a gelato shop on the East Coast. That was our very first loan through our 150K and below small 7A program.
Okay.
So that was kind of our tester to that, to see if it's even something we can handle that's doable. Obviously, we thought it did. We created the program, but that was the very first one. And it was exciting to see them get those funds.
And what happened? Just what was supposed? How did it end? Was this a startup loan?
No, they had an existing gelato shop. They were seasonal, located in a beachfront town, so very seasonable, but they were helping build out or add different equipments and necessary items to keep their business growing.
Good. I'll let you give me another one.
The other one would probably be a USDA loan that I had done.
Me. I love rural America. So tell me about that.
Was over $5 million on a hotel purchase, but so due to the loan size, it had to go to the Washington office for approval. And this had dragged out for about 8 months. It's when they lost funding several years ago. So it was a very, very dragged out process. But as soon as we got funding, we were able to turn around and close that about 2 weeks later. So that was great news for them.
Very good. Very good. Now that you are a seasoned veteran, and I would put you in that category because of the position, not only the position you hold, but what you've seen at economic events, when a college student would come to you, or now you're in the mentoring situation, what advice would you give to a young person in terms of a career in SBA lending?
I would say be open-minded. Definitely learn as much as you can from everybody else, because every deal is not the same. Every deal is so different. The people you meet are all different. It's interesting. Say learn as much as you can.
Very good. Carissa, I've really enjoyed this conversation. I appreciate you sharing. I love the dance part, the tap dance. I love that. I wish I'd known that on the stage in Vegas. Well, for you, it's probably good I didn't know that. But I could see sort of an analogy on tap dancing and when we have a loan decline, or anyway, we're not going to go there. Carissa Sousa, AVP, Shoreham Bank. Thank you for stopping by for a Coleman Conversation, Carissa.